Good morning, everybody, and welcome to day 3 of my Forex trading journey. Hope everybody is having an amazing day so far. And as we go ahead and as we move forward with these calls, the one thing that there are a few things that we are going to want to pay attention to just to make sure that we are moving forward in the right direction. Now, as far as specifically what we're going to be paying attention to, it's really this number right here. Now, I've talked about this particular number back on day 2, but each and every day, what we're going to go ahead and do our best to make a note of is what's called our equity. Now, the reason we're going to be making a note of our equity, in fact, let's go ahead and jot that number down right now, 111.56. Now, the reason we're going to be jotting our equity down is because, and I've alluded to this back on day 2, but our balance can go up and down, but the main number that's going to allow us to stay in this market, that's going to allow us to be able to make or break our account, so to speak, is equity. That is the amount of money that is going to be used primarily for what we're going to be doing in the markets as far as trading is concerned. Now, what I mean by that is while the balance can be a certain number, you need equity more so in order to play in the market. And as we take trades, and we're going to go ahead and be able to show this a little bit more in detail as we take our trades. If we do get an opportunity, of course, we certainly do not rush anything in the market, especially if it's not there. But as the trades are open, as we open trades, that equity number is going to go up and go down. The balance will stay the same. It's essentially going to be a very stationary number. And so the balance number itself will show us a good track record of where we are, and as we explain more so in the journey, that more so is going to be while it's the same as the equity right now, this could potentially change into a higher number than equity. And of course, I don't want to confuse you right now. So we're going to go ahead and be able to talk specifically what that means a little bit later, either onto today's call or at least into the trading journey. So again, to make a long story short, we're going to make sure we're going to be paying attention to the equity number. Now, we are right now on XAU USD gold. We've been trading this for the past 2 days with some success. And of course, as far as this is concerned, while the wins have been absolutely amazing, we do need to understand that there are losses that could be taken in this market. Now, whether we're going to see a loss today or not is something the market will indeed need to tell us. We certainly don't go looking for losses when we don't need to. The primary objective is to win a lot more than we lose. But again, we just have to go ahead and accept the inner fortitude that potential may indeed happen. So as we can see, we are watching XAU USD, waiting for that opportunity in the market. And of course, what we could also talk about is just a few things on the MetaTrader 4 platform that can help you as a trader. Now, I want to talk about specifically timeframes first, and to do that, I want to talk about a few stories I have with gold specifically. So before we did this rendition or not rendition, I should say, but before I started recording, doing the streams of how I'm trading the market, with gold, I used to trade on the 1 minute time frame. And there were strategies that I was doing that was causing me to quote unquote, or for lack of a better word, blow my account. And with blowing my account, what that means is I essentially lost everything on this account. Now, granted, the money that I lost was money that I can afford to lose. And before we even go further, okay, before we go even further, that is probably that is the number one rule of investing. Could be this, it could be stocks, it could be crypto. I don't know what you're investing in. And of course, we can, as we move forward through this journey, we'll certainly talk a little bit more about some of these other investment platforms that are out there. But let's come back to the main one right here, which is Forex trading, right? With any investment platform, especially Forex trading, the only money that should be put in this platform is money that you can afford to lose. Now, the reason I say this is because this allows the stress levels to not be there. This allows the frustration, the worriness, it goes down slightly. And when you know that this is money that you can afford to lose, then you're not worried about changing it or anything like that. You're not worried about trying to make a quick win or something like that. But instead, we can go ahead and but we can trade in the Forex market with a little bit more sense of calmness, being grounded, if you will. So that's very important that you want to make sure that you're trading with money that you can afford to lose. So as we went ahead and we elapsed a little bit of time right there, still not a trade opportunity necessarily as of this moment, but we were talking about time frames. Now, I was experimenting on gold, mostly on the 1 minute and 5 minute time frames before we move forward with the streaming platform journey. And it's very important to recognize what time frame you're using in terms of trading. And as we move forward with some of the other pairs that we plan on bringing along the journey as well, sticking with gold first, I noticed that with the 1 minute time frame, the success on that was a little bit of a inconsistency, only because I was not able to get the alerts that I wanted, because with the 1 minute time frame is because it is very small. We look at the picture of the market right now, and if we put it on the 1 minute time frame, the market gets a little bit smaller, and the moves that we look for are not necessarily all the way there. With the 5 minute time frame, the picture is a little bit bigger. There's more time that is needed in order to get a good move. Thus, the reason we need to be a little bit more patient. And the moves here became more consistent for me as opposed to the 1 minute time frame. So, of course, in the background, my plan is to experiment with all the different pairs that are on there, with all the different time frames, and understanding which ones will work on which certain time frames, and we'll add them here and we'll trade on them as well. Because at the end of the day, if we look for the opportunities, and as long as we know the strategy, the risk management strategy, as when we do all this, then there's going to be a lot of great opportunities for us that we want to go ahead and start to capitalize on. Okay, everybody. So we just see that our last candle closed, and so now we have a arrow that's pointing in the the upward direction right now. So we're going to go ahead and we are going to wait for that candle to close before we take a opportunity to trade, as long as that arrow pointing up holds. So as far as what we could do right now, we could definitely go over a few other things that I do believe are going to be very important for our success on here. So as and what I mean by that, as far as I'm concerned, is specifically some of the other functions that we can use for trading. Now, a lot of you are probably looking at all this and you're saying, well, this is awesome. You know, what you're doing is awesome. I see that you've got your account set up and you're ready to trade, but how can I go ahead and participate as well? What if I am not comfortable trading in this market right now because I'm just starting? You know, I don't have money in order to create a live account, and that's perfectly fine. I do believe, you know, all of us have to start where we need to start. No, I certainly know what that feels like. I certainly understand what that feels like. And I also understand that, you know, there are times where I trade in demo account because that was the only way that I could trade sometimes in my life. However, with that experience and practicing it consistently, when you are ready to start a live account, you'll be all the more better for it because you have prepared. And so to open up a demo account, what we can do is we can on your MetaTrader 4 platform, and there will be a separate video on how we are going to be able to download and install MetaTrader 4. What we can do is we can left click on file, left click on open an account. Now we'll have all these different server options that we can go ahead and choose from. And we can select, for example, the demo option right here. There is always going to be a server that says demo. And so if you're needing to open up a demo account, and this is any broker that's out there, I've seen this on 3 brokers that I've tested myself, MVFX, Clover Forex, and Hugo's Way, to be specific. But there's always going to be a demo account that we can select, and we would click on next. We would make sure that new demo account is circled, just as so, like that. And click next. And then you would put your information such as name, email, phone number, amount of money you want deposited. Leverage will stay the same, 1 to 500. That's the ones that would allow you. And we'll get into leverage and how that's all important in just a moment. But then we would go ahead, we click on next, and we would go ahead and have our account created. Just like that. So now I'm going to be trading on a real account because I want to be very transparent in how my results are going to go on here. You know, I'm very comfortable being, I don't, you know, vulnerable, I don't think is the right word, but for lack of a better word, we could say vulnerable. And we're going to go ahead and just go through the process together, just you and I. And in about 23 seconds, we're about to go ahead and hit our first trade of the day. So we're going to go ahead and let these 15 seconds play out. Just getting to that point. 6, 5, 4, 3, 2, and 1. Okay, so we are in a buy trade right now, our first buy trade of the day for XAU USD. And now let's go ahead and let's take a look on why this arrow was here in the first place. We could see that there was a buy right here, even going back to the last particular amount of candles right here. And again, these are all 5-minute, mind you, but there's definitely a uptrend, a significant uptrend that we noticed so far. So it's definitely, in my eyes, not surprising that we are moving forward in a upward direction. Or how come the scalper said, okay, let's go into that buy trade? Because right now we are indeed moving in a upward trend direction. Now, how can we tell that we are in a upward direction? Well, the reason being is, let me go ahead and let's pull up our marker right here. You're going to notice that in the market, there's going to be what's called structure, market structure. And all that means is price is either going to give you higher highs and higher lows, or price is going to give you lower highs and lower lows. So let me write that down. And we'll have a better record of how lower highs and lower lows work as we approach a sell signal at some point. But the idea between a higher highs and higher lows, that is what's considered it's what's the word I'm looking for? There are many ways to call this, but the way that I describe it is a bullish market structure. And all that means is over time, prices are going up. And so when we look for a buy trade, we ideally want to see bullish market structure. We ideally want to see that prices are continuing to rise over a longer period of time, because that gives us the confidence to know, well, if prices are still going up at this particular point in time, then there really doesn't need to be a reason not to look for a buy opportunity. And then for on the other side, now again, this is the best example that we could see right now, a very temporary bearish market structure. However, let's go ahead and play the other side of the coin. So in a bearish market structure, you'll have lower highs and lower lows. That's what's considered bearish market structure. And all this fancy terminology, to make a long story short, all we're seeing is that over time, prices are going down. And so this tells us that we're entering, or what we're going to want to look for in a bearish market structure is a sell opportunity. And so understanding where we're at in the market right now, we could see for the most part that prices are continuing to rise. You know, yes, I can go ahead and draw all the little higher highs and lower lows, but we're not wanting to confuse ourselves, right? And so we could see big picture overall. Here's our low point. Here's our high point. Here's our low point. Here's our high point. And so I know that because that is considered bullish market structure, I'm not surprised that buy arrow came into play. And again, the reason this buy arrow came into play in the first place is because it did test or attempted to break a very small level of support right here. It's a very small level. Boom. We could see that barely just got below there. And what that tells us is price needed to create this high. The way that our system works is that this is considered now for us the higher low. And now what we want to see is price creating the next higher high for us. And again, that's what we want. That's what we desire, because that means that our buy trade makes money. But again, we also have to understand that may not necessarily be the case. That price can indeed reverse on us, and we need to make sure that we have our backup plan in place. And that's what will be able to be determined as we move forward. Okay. So while we have that particular trade playing out, let's talk about some other concepts that I believe are very important. And let's go ahead and let's discuss them. Okay, everybody. So as we can see, this trade is definitely heading the right direction for right now, which is awesome. But again, the target for our trade is to close when we hit a 3% button. Now, as we move forward throughout the journey, it's going to be a little bit more difficult to know what indeed our 3% is. Again, we're not wanting to put things into, we don't want to overwhelm anybody. I don't want to scare anybody, but we have to understand that that is a possibility for us to happen where 3% may be a little bit more difficult for us. So there are other ways that we can calculate the target that we want, but we'll go over those when the situation arises. You know, we don't necessarily need to pay attention to something that we don't need to be concerned about, at least in this particular period in time. So what I do want to go ahead and go over is, again, I want to talk about the importance of trend, right? Because the trend is the bigger picture of the market. And as long as we are following the trend, in fact, there is a very old adage out there that we want to go ahead and remember. And that adage is the trend is indeed our friend. And there's our 3%, everybody. So, all right, we're going to get that trade closed. So we just made a 3% in that trade. So now let's go ahead and let's move forward with the trend, right? So by understanding that the trend is the bigger picture and knowing that, in fact, if there's anything that you want to take down, if you're writing notes, the trend is your friend. We're just going to leave that right there. If I could spell. We are going to spell that. Okay, so the trend is our friend. Now, the reason we want to remember that is because that is going to be the difference between a session of windfall profits and one of major losses. And we have to think about it like this. If we're placing a buy in a bullish market, and we just talked about a bullish market, right, where prices are creating higher highs and prices are creating higher lows, and we place a buy in the right direction for us, then more often than not, we're I don't want to say guaranteed, because nothing is guaranteed in the Forex market, mind you. However, there is a higher probability of success when we trade in that same direction. Now, if we place a buy trade in a bearish market, well, then that could be not a great thing to do. That could be a situation where we may incur losses because we're trading in the wrong direction. And what I'm using right here, this particular tool right here, you're seeing the buy and the up arrow. This is all based on this concept right here. The trend. I don't mean to make the funny little arrow right here, but this right here, it's all connected to this guy right here. Again, the trend is our friend. There's anything that you remember from day 3. If you want to put down, hey, this is what I learned on day 3, trend is my friend. If that's all you took from today, perfect. Now, another way that we could think about it is there's going to be a lot of resistance if we trade in the opposite direction, right? If we're going to be looking to place a sell if we looked for a sell in this particular landscape right here, then more than likely we are to encounter a stronger chance of resistance because we're not following along with what the longer term picture was. We're assuming that, hey, this is the end of the bullish trade. If we assume that by placing a sell trade here at this point, then we would be fighting against some major resistance, as we saw after we took that trade. We were out of that trade in less than 15 minutes on this one, getting our 3% goal. Now again, the opposite is true. If it was instead a bearish market, where we just talked about, a bearish market has lower highs and it has lower lows. If we decide to place a buy trade on there, then that would also, we would be fighting against some strong resistance on there as well. And so while trading, is very important to understand what trend that you're in, whether that's a bullish trend or a bearish trend. And sometimes there may not even be a particular trend out there, or there may not be a consistent trend. You might be in a ranging market, and while those are a little bit more trickier, I should say, there is a way to trade in those markets. And I'm positive, in fact, I'm 100% confident we are going to run into one of those situations, whether it's gold or a different pair. We're going to run into that situation, and we are going to make sure that we capitalize one way or another. Now, another way to help determine what type of trend that you're in is using what's called trend lines. Now, trend lines are this particular line right here, this particular icon that I've circled. It says draw trend line. So I can use a trend line, and I can go ahead and connect the pieces together. As you can see, this is what the trend line looks like. And you could draw trend lines multiple ways. Frankly, the trend lines are so, and we always want to talk about being objective, but I feel that they're so subjective, and so it's hard for me to use a trend line knowing that I can go ahead and eyeball what's taking place. However, I understand that with a lot of us being new, especially me, I had to use trend lines at first, so I can understand what I'm doing. Now, just taking a look right around our, we just talked about it, our swing, our bullish market structure. This was the higher low, higher high, higher low, right around here. Starting from a higher low, I could see that was a significant trend line that was being developed from this point all the way up to this point right here, where our buy arrow was indicated. Now, again, I know that hindsight is 2020, and this could have easily broken the trend line. I don't want to, but the fact that it didn't, and decided to shoot all the way up, where we were able to collect our aforementioned 3%, that does signify that we were still in a bullish market direction, and we were still in what we would call a uptrend. And an uptrend is a fancy term for saying that we were on a diagonal line that shows prices were increasing. Now, conversely, so let's put that right there. Now, conversely, there are things such as a downtrend. You can see right here is a good example of a little bit of a downtrend. And right there, that's a diagonal line that shows prices were decreasing. And so we can take a look at this line right here, right? So we started from our highest point in the market, and it went down all the way. And we could see that by doing this, that the line right here was then broken by price going up, instead of a downtrend, now we can look at it as, instead of now seeing this picture right here as a downtrend, because this line was broken, we now ignore this downtrend and now we respect the uptrend that was being created, thus leading to our price right here. Now, again, I know that this is a lot of information right here, and I don't want to necessarily overwhelm anybody. So to make a long story short, on this buy trade right here, the arrow pointed up because we were in a bullish market structure. We were following a uptrend. We took the buy because we knew we were in a uptrend and we were in a bullish market structure, and we made 3% off that trade. And again, I'm not trying to make, of course, I know that so far, hey, look, these last 3 days have been pretty easy trading. It's not, it really is, the concept is simple. What we're doing here is the concept is simple, but it is not easy. If it was easy, well, everybody would be trading. And, I know how the Forex market is scary. And I know that not everybody is doing it, nor that everybody is not comfortable doing it. And so, and I said this on day 2, and I truly mean this, that this is a great opportunity for everybody. And I know that in my heart, if I'm able to show what I'm doing, and those who watch my videos take it in, make their own trading account, practice, notice what I'm doing, then, and if I help at least one person become not only intrigued, open to the Forex market, passionate about it, willing to not only become a student, but also become a master of their own and be able to teach what they know to people, then I've done my job on this great universal plan we call the earth. And that's the bottom line right there. Now, another thing that we want to talk about also as to how come we want to learn or how come I want to teach in this particular method is, I know for me that a lot of what works, as far as trading, is consistency. And I know that with consistency, this will only allow us to make sure that we are able to be profitable over a period of time. I had to go through a lot of testing, and I had to go through a lot of wins, losses, frustrations, anger, confidence, building confidence, not so building moments. And I know that with the consistency that I have in the almost 2 years experience in the market, for me to be able to be comfortable and confident to teach what I know that I had to go through a lot of testing and trading on not only on my own, but also going back to each and every single Forex mentor that I've had, because I have been grateful to have an abundance of Forex mentors throughout my journey. I've been grateful to have a lot of relationships in that Forex journey. And, I know that over time, I'll be able to connect with a lot of you who are watching these videos and share some more of my stuff as we move forward. You guys will grow from students to masters and teach a lot of people what you know. And, just going back to the whole, this is my way of giving, if you will. Of course I'm making money too. So there's the selfish part of it, if you want me to say that, right? But at the end of the day, I could do, I believe it's best to, give my knowledge here publicly on a public forum where you can watch for free and you can see what I'm doing. And I hope, and this can help you grow as a trader. There's, that's all really there is to it. And so going back to consistency, not to not to get all on a tangent right there, but going back to consistency, it is very important to know what you're doing consistently in order to have a great strategy. Now, what I do is just one strategy, using one indicator, using a combination of technical, fundamental, and also just experimentation that I have done, going back to experience. Is my method going to work for every single person on this planet? No, absolutely not. I can only hope, again, the goal for me is to at least get one person, right? One person to see what I'm doing and saying, hey, that's cool. I want to see what I want to try that out. And if there's another strategy, if there's someone that says, hey, I'm doing this and here are my results and they're better than what I could have done, I would be very impressed. I would be very grateful that that information was given to me, and I would learn. Because as far as a teacher is concerned, there does need to be balance between having the master type. Here I am going on this tangent again. Here I am, but there needs to be a balance between being a master and being a student. And so going back to the original point, if you have a strategy that is consistent, that works on a day-to-day, week-to-week, month-to-month basis, then stick with that strategy. Yes, there's going to be ebbs and flows in the market that we don't necessarily control. We can't control this market at all. The market is going to do what the market is going to do. All we are is just, right now we're spectators in the market because we're waiting for our next opportunity. And sometimes we are combatants in the Forex market arena, if you will. And so right now we understand that there are times to trade, there are times to watch. And we'll have a lot more of these conversations as we move on with the Forex trading journey. But again, the more important part here is just to know that you have a consistency with your strategy that works. Now, another thing that I do want to talk about is take profits and stop loss. That's a very common topic that's out in the world, if you will. And there are people that set hard stop losses, and there are people that set hard take profits. And I also know of automatic trade managers, and all that stuff is great, right? Let's talk about the benefits of having that. If you don't have the ability, like I do, to sit in front of the computer, for about 5 hours. Again, my trading schedule is from 5 a.m. to 10 a.m. Mountain Standard Time. If we don't have the ability to watch our trades day out, out minute by minute, hour by hour, in this case, 5 minute by 5 minute candles, then stop losses can help you just put that on there. Stop loss and take profits, putting that on there will help you as far as being able to let those trades go and going about your day. And automatic trade and automatic stop losses, automatic take profits, it allows you to do the same thing without you need to worry about, oh, where do I need to put my stop loss, or oh, where do I need to put my take profit? It's already put there for you. That's it. Now, there is some manual tweaking, of course, to initially set it up, but once it's on there, it's on there. Now, the people that, now, how could I put this? I don't want to sound too harsh. I don't want to sound too blunt, direct, egotistical. I don't want to sound like that at all. So let me choose my words carefully. It's not that I don't want to train those people necessarily. I do believe that any trader out there that at least gets an iota of knowledge that I'm putting out there and uses it, I've done my job. But for me, my main focus for the traders that I want to teach and train is we aren't going to use a stop loss. We're not. We'll have a way of making sure that our trade does not go into extreme levels of drawdown, right? Like, I'm not going to just recklessly tell people to not put a stop loss without understanding how come you don't put a stop loss in the strategies that I use. However, there's not a hard stop loss that we're going to put. There's not even a stop loss we're going to put in these strategies that we're using. There's a particular strategy that we're going to go over at some point, because again, what have I been saying for the past couple of days? Because I really want to go ahead and drill this into you. Yes, we have seen winners so far in this journey. But for me to be irresponsible and say that this is going to happen all the time is complete BS. It's complete BS. There is going to be a point where we do indeed take a loss here at some point. I'm not sure where it is. And it's not like I'm throwing it out to the universe to say I want that, right? However, I need everybody to understand, to be prepared for when you go through a loss. Because going through your first loss, demo or real account, I know from experience, it's not easy. In fact, you're going to be pretty freaking stubborn about it. I go back to my first trades of like, and that's when I was using a stop loss to take profit and just blindly going after trading signals. I remember my first trade, right? This was back in November of 2020. And I remember my first trade, and I see this signal. I see this particular pair. I see the stop loss to take profit. And here my mind goes, I'm sorry, buddy. But my mind goes, ooh, I'm gonna make money on this trade. And I didn't even know how come I lost that trade. It was ultimately a loss. I don't know how come I lost that trade, but I realized something. I really like Forex trading, or at least I didn't know it at that point, but I was hooked. I was hooked after a loss. Like that is, I know that's so weird, right? I know that's like the weirdest thing, but if you think about it, I don't remember this exact direction. I think it was a sell, I think, right? And I didn't realize at the time, but if I clicked buy instead of sell, I would have made a lot of money on that trade. And I thought that was so intriguing. I was like, huh, like, how does this work? How do I know to pick the right directions? And how do I know when to enter a trade? And how do I know when to exit a trade? And, I had all these questions in my mind through, when I first started to, now I still have questions. Again, I'm going to reiterate, be a student, be a master at the same time. Do that. But going back to stop losses right now. So I don't trade with a stop loss. And there's a specific strategy that I use in place of a stop loss that is designed to protect my capital from going into severe drawdown or even busting my account. So in other words, I should say, I use a different method for putting a stop loss that doesn't act like a stop loss. And if I've already overwhelmed you, or if I've already blown your mind, or if I've already, gave you a fire hose of information just from those words alone, congratulations. You're stretching, you're opening your mind, and we're really getting ready for this beautiful journey that we're a part of. And I'm grateful to have each and every one of you on here. Whether you're from day one, whether you're from day two, or whether your first day is day 3. And that doesn't mean you can't go back to day 1 and day 2, because there always will be nuggets that I will be dropping. Whether it's trading related, life related, it all really helps in terms of trading. Because in trading, you're going to get exposed to the type of character that you are at the beginning and what you will grow into as you move forward. And I know that for me, when I first started trading, I was the most aggressive, stubborn, prideful, egotistical trader that was out there, bar none. I wanted to figure this out on my own, and I did not ask for any help. And that was, to me, more so a weakness, but in turn, it developed into a strength once I figured out how to use those traits in the right way. Nowadays, I still ask for help for some of my great mentors. I mean, I've talked about him before. Sal Leto, he's a very excellent trader that has been mentoring me throughout my my journey at this point in time. And Dr. Luis Ariaza, his psychology has also helped me construct exactly how I need to think as a trader. And there's a lot more knowledge. There's a lot more people that have become a part of this information converted into wisdom equation for me. And there will continue to be people that will help me do that. And I am the one to make sure that you get that information as best as I can in a free way, so to speak. Because again, these videos that I'm putting onto my channel are completely free. You just watch them. I mean, what's the point of me what is the point of me charging for something right now for those that don't know what Forex market trading is, don't understand the financial potential, and putting a barrier to entry to them by putting a price tag on these videos right here. Now, with that being said, I understand the business perspective. I'm not I'm not a naive fool. Well, sometimes I am a naive fool, but more on that later. But I do understand the the business side, revenue. That's all important. And I don't ever knock those for making their Forex businesses. For the businesses that I've been a part of, I wish them nothing but the best of success. Tradera unfortunately is shut down. I used to be a part of Gobi Tradehouse, and I wish them nothing but the best of success. Without Gobi Tradehouse, I wouldn't have been able to turn myself into the trader, the builder of relationships that I am now. And I'm forever grateful for that time, and I'm forever grateful for the people that allowed me to do what I'm doing right now. And now that I'm here with my new company, 8-Minute Trader, Longevity, and having the access to develop and build those relationships, I'm forever favored. I'm forever grateful of all the opportunities I have. And because of all these opportunities, now I am, what's the word I'm looking for? I am now in a spot where I could teach people what I know. And I can be that type of person that can really help somebody in terms of growing. Now whether you watch, one video and you decide it's not for you, that's fine too. That's absolutely fine too. No, I'm here putting this information down, understanding that the dot that I want to attract are people who are not only take a look at this, are intrigued by the possibilities, but are also so hungry to be successful, so hungry to really want to learn and not have to go through the complexity or go through the pain that I had to. These are the reason these videos are being created. And again, if one person is able to move forward in that direction, then I've done my job. I've done my job bar none. Okay, everybody, just wanted to come back here and execute a quick buy trade. I got a little distracted, so that's a little embarrassing. I wasn't able to pick that up as quickly as I wanted to, but we did see that the arrow itself did come back, so we definitely want to go ahead and get that trade executed right there. Again, we're just following the... Oh, okay, here we go. Here we go. So, all right, this is perfect. This is perfect. So I wanted to show everybody what happened on that move right there. So we noticed that the arrow itself disappeared. We saw that there was a buy arrow, and then now we saw that the buy arrow itself disappeared. And what that means for us is that the trade is over. So we just took our first loss on this particular trade. Now, over the course of our time together, I had mentioned that we were going to get to this point. Not only were we going to get to this point, but I was going to show everybody exactly what happened or what our plan is when that arrow disappears and we incur a loss. Now, again, this strategy, I teach to a specific group who's wanting to learn this strategy. I understand this strategy is not for all. And so I'll either have people at this point who will continue to watch or who might think that I'm crazy or something like that. But anyway, what I do is if the arrow disappears, right? Now we just took a buy trade on the last guy, which on the I'm sorry, not the last guy, the last candle, which made sense because we're still in an uptrend. Now, when that buy arrow disappears, to me that means that we're no longer in this buy trend, and instead now we're going downwards. Now, I could have taken a stop loss, exited the trade, closed with a little bit of a loss on the buy trade, and we could have ended that from there. However, you would have noticed, and now that's not there, you would have noticed that we were in a little bit of margin. Now, the margin, I talked about it before, but the margin is the number. Well, the margin is the number that dictates the equity going up and down, going up and down. And we talked about how important already equity is when we're in the charts. We talked about how important that equity is when we are looking for trades. As long as we keep our equity in check, then we don't have to worry about blowing up our account. So the way to effectively control equity so that it doesn't keep going down more than we can control, and we know that we are in a down, and we know that the buy trade no longer works, what we do is we're going to talk about a system called hedge trading. Now, with that being said, hedge trading, you technically can't do this on a US broker for some odd reason. Now, I'm not going to get into the laws, the specifics on that, nor is this the time nor place to be talking about such thing. Instead, what we're going to be talking about is the concept. The concept states that a hedge is what a trader does in order to protect their position and also avoid having to exit a trade that would incur in a loss if they don't want to. Now, as we move forward, and whether that's later today, tomorrow, or the weeks, the months to come, there's a specific way that we want to exit these particular positions right here. And that will be something that we will move forward in explaining how to do. So the idea behind it is because we were in a buy trade and that buy trade went down, did not go in our favor. The way to execute a hedge trade is we would place a sell trade until the margin goes down to zero. Now, how can we determine that the margin went down to zero? So, 1 second. Okay. Now we can determine that the margin went down to zero by coming over to our trade terminal tab. As you can see, we have balance, equity, free margin. And if we were in an active trade, or let me explain that. If we were in a trade that dictated that we would increase our equity, relying on price to go in a certain direction, well, of course, buy means price would go up, sell, price would need to go down. And we were dictating that to make sure our equity was going up, or in the case of drawdown going down, that would be margin working for us. We would see a margin icon appearing. Now, because we don't have a margin icon appearing anymore, that means that we don't have to worry about staring at the computer or closing in a trade or panicking that trade didn't go our way. We simply place a trade in the opposite direction. For a buy. After the arrow disappeared, we went in for a sell, and that's it. That's it. And now what we do is we wait for the next opportunity, whether that's a buy or a sell arrow. And again, that is going to be dictated by how the market wants to go for us. All right, everybody. So we are back. And as you can see right here, I ultimately ended up missing this particular sell trade right here. But we're not going to get too upset, though. There are millions and millions and millions of opportunities that are going to come to us, not just on this chart, but every chart that will lie before us in our future. So I am not going to go ahead and be upset about that. Now, one thing I do want to point out as we go ahead and as we take this sell trade right here is you're going to notice that first and foremost, my margin has come back from not being anything to a particular number. And that right there is going to now confirm that I am going to watch my equity either rise or fall depending on the outcome of this trade right here. And also, as you can tell, I have a pretty great sell trade that is in profit right now, but I'm choosing not to close that because that is not the direction that I want to go. And I'll explain. See, we have this down arrow that's pointing right here. So let me grab my pen right here. We have this down arrow, and this down arrow is telling us that right now, instead of us being in an uptrend, we are now moving towards a downtrend right here. So because of that, there's no point in taking a buy position. Now, as we move forward throughout the future of these particular calls right here, I'm going to show you specifically what I mean by that as far as how to properly exit that sell trade I was in, depending on, of course, the position and everything like that. But we're not going to worry about that right now. Let's not get ahead of ourselves. Let's not overwhelm ourselves. The main objective that we want to focus on right now at this very moment is that a sell trade has been given to me, a sell arrow has been given, and that's the trade I am deciding to take. Now, because I'm in a little bit of drawdown right now, because of what happened with the buy trade previously, there's going to be a specific way that I end this trade in the outcome that I want to. Of course, I've explained in the past that if it does get to my end of my trading session, which is 10 o'clock, so that's within the next 54 minutes, depending on where we are in the trade, we'll end up closing that particular trade at one point in time. However, The other way that we're going to close this trade, because of the current situation that we are facing right now, I'm also looking to close this trade if I am 30 pips in profit. Let me go ahead and write that down. In a situation like this, where I know I am in account drawdown with the trades I am in currently, I plan to close my sell trade that I opened when I am 30 pips in profit. And now we're going to talk a little bit more about what I mean by that. So let's move this right here. So what I mean by that is right now I have a 0.01 lot size. We could see that that is my lot size, not only based on what my indicators tell me to put in there, but I'm also following my golden rule. For those that remember, I'm so sorry, let me clear my throat. For those that remember, I believe I talked about this on day 2. My golden rule for risk management when it comes to gold, and of course, there's going to be multiple rules, and we're going to talk about them as we move forward, right? But let's not put the cart before the horse. Again, we're just going to we're going to focus only on gold for right now. The objective for me is for every $100 that's in my account, I'll increase my lot size to 0.01. Now, what I'm going to consider my account balance is this particular guy right here, the equity. As I had stated before on the beginning of today's journey, the number that is going to stick out to me the most is going to be the equity number. My balance number may be bigger than my equity number, especially if I foresee what's going to happen these next couple of days as you move forward throughout the journey. So what I really want to focus on to make sure I'm doing the most risk management as possible is to make sure that I am using the equity number, or I'm focusing on the equity number to make my decisions. And in turn, what this is going to go ahead and do for us is to make sure that we are not only making money on the charts, we're making money, we're losing money. That's all fine and proper. However, the most important thing that we can do, the number one thing, and I might have said this before on day 1 or day 2 of my journey, is that we need to make sure that we are preserving our working capital. So we need to make sure that this equity number is well maintained, that we have a proper plan to make sure that equity number does not go in a wild direction in the negative. If it wants to go in the positive direction, that's fine. And I'm confident we'll see examples of that down the line. But as of right now, what we need to focus on is making sure this equity number stays up. And so the way that we do that in a situation like this, again, going back to where I know I'm in account drawdown with the trades I'm in currently, I plan to close this sell trade right here. Either A, if we get close to when I need to stop trading, which is 10 o'clock, or 2, if I get 30 pips in profit. Now, what does that look like? So now that I've explained what the lot size is, so a 0.01 lot size in this situation is 10 cents gained or lost per pip. And so if I know that, so 1 pip is equal to 10 cents either on a positive or a negative, then in this equation, because I am looking for, and here we're going to move this so that, we can get a good understanding of what we're doing here. Okay, here's our text. And so right here, what my plan is to close this trade with a 30 pip gain, and that equals $3. Now, this number specifically, how come I'm looking for that? Remember what we were looking for the past couple of days. We were looking for a 3% increase in our account balance, which in turn was a 3% account balance in our equity. So let's write that down. On the prior days, We looked for a 3% account gain in the balance, which in turn helped us with a 3% account, 3% gain in the equity. Again, all this ties to equity right here. This is the most important number. If there is a number, right? There's a number that you want to pay attention to the most. It's that guy right here, the one where I drew the arrow in the circle or doing all that. That's the number that you want to pay attention to the most. So when we get to a point where we can close this trade with $3, 30 pips gained, that's a 3% account gain in the equity, which allows us to move forward in the direction that we want to. Again, for us, while the balance number is important, right? Because it tells us, hey, this is how much we gained throughout the day, lost throughout the day, whatever. The equity is the number that allows us to still realize that we still have a fighting chance in the market. And so if we can make sure that we are moving forward with equity in the right direction, then everything else is going to fall into place. So we're waiting on this particular trade to close. Now, I'll explain a little bit of the exit scenarios that we will encounter as we move forward. But at least for right now, we have a sell trade that's going on. And we are looking to have this particular sell trade play out. And again, we still move forward with, if we see an arrow displayed on another candle, we do the cost average strategy, but that's still all in play. But for right now, all we need to focus on is the fact that we've opened a sell trade and we're already about 10 pips in profit. Now, does this mean this trade is going to go our way? We definitely hope so. In fact, now that I see a downtrend, a very strong downtrend, there's definitely a higher chance that this can go our way. But again, we know what our contingency plan is. If this trade decides to reverse. We saw it in the first example with our buy trade that we had to go ahead and put a kibosh on. And the same thing could happen with our sell trade. And again, we're not going to worry about what happens here, because as long as we know what the equity is and as long as we maintain that equity, then everything is going to be absolutely perfect. Now, as you notice, this lot size, this number right here, this percentage, more or less, until we get ourselves back to a not so much of a drawdown state like we're in right now, these numbers are going to be a little bit more irrelevant as we move forward. It's not to say that we aren't going to pay attention to them or that they're going to be important towards the future, but for right now, what we really need to focus on if we get into a situation like this, so all we need to do is concentrate on how this recent trade is doing. Now, I was able to make sure that we were looking at our recent trade by making sure if we go over to, sorry, just give me 1 second. I don't know why that's because my select thing was not working. I forgot to put the mouse instead of the select option. But as far as what we're looking at, I went ahead and I left clicked on this time right here and made sure this arrow, it's a little hard to see, but I'll go ahead and draw it. So we can see this icon right here. The arrow is pointing in the up direction. And that tells us our recent order that we have placed right here. So my focus right now is just on this recent order. I'm not focused on what's going on with the other trades. If I need to focus on the other trades, I will tell everybody. And of course, we'll have a teaching moment as to how come that's the case. For right now, though, we're going to work specifically on just this recent order right here. And we're not going to worry about anything else at this present moment. And so, while we wait for this particular trade, let's explain a few other things that we're going to talk about. So, as far as hedging is concerned, this particular strategy, how come I went ahead and parlayed in it? This is all due to experience. For me, I was to tell a personal story about my trading before I even thought about this particular strategy. I was not being consistent with my win percentage. Sometimes I win some, sometimes I lose some, sometimes I win some, sometimes I lose some. And it's very aggravating to me. It's borderline insanity when I know I'm doing the same dang thing and I expect different results, right? Now I know I'm not the one who quoted that. I think that was Albert Einstein. I mean, I certainly don't want to get the guy's name wrong, because that is a very perfect quote. If we do the same thing every time and we expect different results, that is the perfect definition of insanity. And so I experimented. Actually, I'll tell everybody this quick story about how I discovered hedge trading. And I go back to, this was probably about a year and a half ago, sometime around July or August of 2021. And I was playing around on the weekends with crypto. Now, crypto trading, the reason why I don't trade anymore on the weekends is because I don't like to trade on the weekends. But back then, I realized the crypto market was open after Fridays. And so I figured, why not? Let's go ahead and let's experiment with and let's clear some of these drawings out of the way. So I figured I'd experiment with this particular concept a little bit. Now, how I discovered it was I was playing around with some trades, and I realized that one trade was going into drawdown. And being the stubborn individual that I am, that I didn't know how to take a trade with the loss. That was one of my weaknesses. I figured, how can I go ahead and how can I stop this trade and all this blah 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 blah. Like, all these thoughts were going in my head. You're not necessarily coherent or well thought out thoughts, if you will. It was more so just the ramblings of a madman saying, "Oh, how can I do this?" And then I realized that I can go ahead and click. I believe I was on a buy trade. I was on a buy trade with Litecoin, LTC USD. I was on a buy trade on Litecoin. I clicked on sell, and I realized the counter stopped for money going up or down. And I was beside myself. I was like, whoa, I could do that? Like, that's a thing? Like, that is actually a thing you can do? And of course, I didn't know how to properly do all this. So I was, experimenting. I went boom, 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 like, hey, I'm looking at all this, making all this money. And of course, I got that account blown because I did not understand the principle of equity. I just that is something that my mind didn't understand at the time. And so I had to then work on or approach trading now understanding what equity does to an account and how margin affects an account, and then margin level. And that particular lesson, I'm hoping we don't have to cover necessarily. However, we can't be perfect at trading, so there might be a situation where we may have to talk about that. Anyway, going back to the story, the idea was I discovered, dabbled in this method just a moment, realized how powerful it was, and over the course of a year and a half, I dabbled between the regular trading. You put the stop loss, you exit, you either win or lose, or take profit, you win or lose, so all that good stuff. And I dabbled between this new method. Now, granted, this method I'm doing right here, I know does not work on all brokers. In fact, I am 100% confident it does not work on US only brokers. As I had talked about, this particular method is outlawed in trading. It was somewhere around the time of, now what I mean by outlawed, it's obviously I can do this right here. Now, this is because this broker is not located in the United States. It is located in another country, and where they do not have the laws that the United States does, which is the first one, first out rule. Now, this is an important, of course, especially if you decide to take this journey with me and go and choose the broker that I am a part of. However, it's important to understand that at the time, this particular broker or the United States brokers do not allow you to place this trading method right here. Now, mainly it's because a lot of people didn't understand how spreads work, how swap fees work. And of course, when you don't understand this particular method, or you don't understand the mechanics of what goes into trading in this style, of course, you're not going to be successful. If you don't understand something, you don't work on or apply the knowledge or the lessons that you've learned and keep doing the same thing, again, goes back to insanity, Albert Einstein. And so through trial and error, and of course, now understanding the things that I do now, thankfully, thanks to my mentors and also my own little independent understanding of how everything, or not everything, right? Because there's always stuff to learn, but understanding what I know now, this strategy has a specific rule set that I must follow. And if I don't follow this rule set, then I could say goodbye to this account. So as we could see right here, our trade is in a little bit of a drawdown right now. I'm just taking a look at my high point right here so we could see that we are, our high point is about 1709.11. Okay, so that's how come the arrow is not moving in to the next candle right here, is because this arrow, its high point was 1709.11 and currently price point is 1708.82. Just to want to give you a recap on what's going on with this trade. But anyway, going back to the story of hedge trading, this particular method is not necessarily one that's recommended by a lot of traders. With trading in this style, there's a more advanced level that you have to grasp with first. You have to learn all these different things. And I figure that, yes, while it's important to learn this, I can also show you how I trade, what buttons I click, what I look out for. And we do this all live. Again, I actually, and personally, I didn't take that trade right there, the one with the down arrow, because I didn't record that, right? I don't believe it's fair for me to show off my results if I can't show you on a stream, me putting this on the YouTube channel or whatever. If I can't show you how I did that trade and how I executed that trade, I cannot take that trade. And that's a rule that I have as a teacher wanting to guide you on the Forex markets and how I trade and how I do things. It's not fair to you. And if it's not fair to you, then I can't do it. No, sir. So I missed out on that trade, and that's completely fine. Again, many opportunities. So going back to this hedging rule right here, that's why it's very, very, very important to make sure you know what your equity is, because the equity is really going to be the key. Balance is important, but equity is super, 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 super important when it comes to this method. And then another thing that we can talk about especially when it comes to hedging, is overtrading. That is a big no-no, because if you go in all sorts of certain directions and all that, you have to take into account not only spread, but commissions, swap fees, and we'll get into all that throughout this trading journey that both you and I are doing. However, what's super important right here is the fact that you don't want to necessarily take too many trades. I mean, let's go back to these past couple of days, right? Only 3 trades were done on day 1. 6 trades were done on day 2. We took 1 buy trade that hit the 3% mark. We took another buy trade that we put in a stop loss for, or not a stop loss, I'm sorry, but it lost. We put the sell trade in when the arrow disappears, so that's 3. And now we're working on 1 trade right here, which is 4. And that's really a very important key to compounding your account effectively with the strategies that we're about to do. Now, I know that, down the line, there are going to be more trades, of course, that we're going to take, but we're going to do this in a very deliberate, smart manner, because we don't want to overtrade on our accounts. Now, when we overtrade, what we do is a couple of things. A, we get trader fatigue, we get tired, which is specifically how come I have a very strict rule of I start trading at 5 a.m. my time and I stop trading at 10 a.m. my time. And not only that, but what you can also do is over leverage your account. Now, over leveraging is essentially you stretched out your trades too far. You have too much margin that's going out there that's not going to hold up with your equity, and you could get into a margin call. Now, I hope I don't have to teach this rule, or I hope you don't have to learn this rule. I've learned this rule many times myself, and it's not a fun lesson, but it is something to be very careful with. And there are different ways that you can make sure you're not in a margin call. However, the important part here is that we don't ever have to, I don't want to say don't have ever to, because I'm sure there will be a situation here or there at some point. Again, training's not perfect, but it is very important to know these particular different things so that you don't put yourself in a situation. Okay, so it's definitely not the high mark yet. So it's definitely important to make sure. There we go. Now the arrows come back. Okay, so we'll wait for that arrow to, or this candle to close. Again, we don't, that way we can make sure that we execute a sell trade if we can. And the only reason I say that, and if everyone remembers a little bit earlier in the recording, I took a buy trade right when this candle closed, or not necessarily when the buy candle closed necessarily, but a little bit later after that. And the second candle came in, and while a buy arrow was displayed, it moved to the next candle. It then disappeared before the candle closed. Thus, there was no need to place that second buy trade. And that's how come it's very important to make sure this candle closes with the down arrow in mind. If it stays there, we'll take that sell trade. If it doesn't, then there's a particular way we're going to exit this trade. And I'll show that if that happens. But for right now, we just wait and we let this candle play out the way that it is supposed to play out. Again, all we're really doing with this indicator right here is we're using this indicator right here to help us with entries. But most importantly, with these entries, we're understanding how the market works, how to trade with the trend, and understanding when a trend is over. When we took this buy right here, so let's go back to our pre. Oh, there, candle closed. Let me do a sell trade right there. Okay, we're in 2 sell trades now. So that's 5 trades currently open for the day. But remember, when we took this sell trade right here, this was an understanding that we were still before all this stuff happened. So let me try to get rid of all this. Right? So before all this happened, pretty crummy job of getting rid of all these candles, but the idea is not to look at them. So let's go back just a second while this trade plays out, because it's going to take a minute, right? Okay, so we come back over here. Now that's right. Okay, well, that's fine. Okay, let's pretend that that's not there anymore. Okay, let's come back to here. Now remember, when we took this buy trade over here, okay, that should do it right here, right about there, right about there, right about. Come on, there we go. Oh wait, I can scroll. Go back here. Okay, so remember when we took this buy trade, which was right around over here, we anticipated that the uptrend that we had before was going to continue, right? There wasn't anything that was saying, oh, here comes a sell trend, here comes the downtrend. No, we didn't know all that. But we assumed that the uptrend was going to continue because of the previous history of price. Now, as we move forward, right? So let's get rid of this drawing. Now, the reason we took this sell trade right here, right, was because now we had a confirmation that the sell trend was, the buy trend was over. That arrow disappeared, confirming that the uptrend, the bullish market trend was over, and now it was either ready to go into a downtrend or consolidate. But we certainly could predict at that time that the uptrend was possibly over, so we put a sell trade in to protect our account. And as price moved, we could see that it definitely went down and we protected our capital. And of course, this downtrend would have confirmed that this down arrow confirmed that a downtrend was being made. We could have made a trade right there, and then there we go. And that would have been, continuing our journey. But now that we have this downtrend right here, again, confirming that we are still now in the bearish market, we go ahead and we let these trades play out. And it will tell us if we are going to be in a reversal. It will tell us if we need to get out of these trades. However, until that particular point in time, we allow the market to do what the market wants to. Now, as far as some of the things that we want to avoid, and specifically how come I trade during these times right here, is because from 5 a.m. to 10 a.m. is not only the available times that I feel I can trade, but I also understand that these are the more higher volatile periods in the market. Now, what do I mean by that? I know that around 5 to 10 a.m., gold specifically, I haven't tried out any pairs with you guys on our trading journey yet, but there will be. Trust me, there will be. We know that gold moves pretty decently for us from 5 to 10 a.m. So as the old adage goes, don't fix a system that's not broken. So if I understand that this is all fine, that we are able to move forward, right? That we're able to move forward with the volatility, or not. Let me break this into layman's terms. If we are able to move forward and understand that this pair moves the way that we want to, at the speed that we want to, then that is the period of time that we want to trade. Because there are, again, 24 hours in a day, 24 hours of 5 days a week that this particular market is open. And some periods are going to be faster, and some other periods are going to be slower. So if I know that from 5 a.m. to 10 a.m. is a period that I like because of its speed, while also doing a little bit of research and understanding that the other periods are not necessarily periods I want to trade in, then I'm going to keep to my 5 to 10 a.m. schedule, at least when it comes to trading gold. Now, for those that can't necessarily trade these hours, then I'm not sure if these lessons right here are for you specifically as it attains to trading this particular instrument. There may be other times in the day that suit you best. And I personally only want to trade this particular period of time. So while some of my lessons, my trainings may be important to you, if you come here just to see me trade, then that may be less effective for you because it won't work with the time that you're trading. That's definitely something to be considered. And I understand that coming as a teacher, because I know what my dot is for people that would have this particular availability in their schedule to trade, want to see how gold works around this time, and also how my strategy works. Now, if you come here just for the strategy, then these lessons may apply to you, because now you can get a sense of, okay, I know how he's trading, I know how he uses the indicator, the strategy, and I can use that for perhaps a different instrument, because there's so many instruments in MetaTrader 4 in the markets. And I can use that. I can do a copycat, if I may, on what he's doing,
but just for a different instrument because it's a different period of time. And if that's you, then these videos are for you, because what I teach is definitely important in that sense. Now, some of the things that, as we move forward, because this trading session is about to end, there are other core principles besides trading that you want to also pay attention to. And I delve into them in the manner of psychology. Now, the reason I go into psychology, how come that's very important, is because it's crucial to know or to get yourself in a mindset to do this, because this information, the way that I'm teaching, it's not just me getting the experience and coming onto a call like this and being able to talk. There were certain things within my inner psyche, my inner mindset, that I had to condition first, because for me, I'm thinking, when I first started trading back in November of 2020, I had thoughts of, oh, why do I need to teach this? I'll never be a teacher. I'll never be a coach. There are plenty of coaches that are out there. What do I have to offer? What do I have to service to the people? How come people would listen to me? All these thoughts, right, that just came into my head. It's like little I don't want to get too religious here, but little demons coming into my head saying, you could teach this? Ha! All that stuff right there. And those are very scary thoughts to have, especially if you're trying to get confident, especially if you're trying to really work on the things that you want to work on. And so a lot of what I had to do to break that conditioning, we talked about journaling on day 2, and I do hope everyone had a chance to try out journaling. In fact, I did my journaling this morning. I'm sorry, not this morning, but yesterday. I wrote down what I'm grateful for. And I covered specifically what that means to me and what that would mean to you on day 2. So I would definitely check out that recording if you haven't. But there are other things that I had to learn along the way as well. There are many, many, many awesome people, that I consider mentors. I've already mentioned the the following people, right? I've mentioned Sal Leto. I've mentioned Dr. Luis Ariaza. I've mentioned Dean Graziosi. I've mentioned Tony Robbins. And there are plenty of people that I read from, that I studied from, that allowed me to figure out what I needed, which allowed me to then develop the things that I have now in order to be confident sitting down on a recorded stream, if you will, while everyone could watch me trade. It's a very vulnerable thing. It's a very vulnerable thing to put yourself out there and impart and give yourself the wisdom. Because for me, because I've had so many teachers, I'm like, wow, they can talk and they could present information. They've got the charisma. They got this, that, da, 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 da. And I'm like, what do I have to offer? But then as I started to recognize some of the things that I myself didn't know I had the capability of having, right? Or for lack of a better word, because I now know what I didn't know back then, I now have the confidence and the courage. And there's always going to be thoughts in my head saying, I can't do this. There's always going to be thoughts like that, but I have to push them to the side and for lack of a better word, tell them to F off. Right? And it's not easy. Not easy whatsoever to do something like that, especially if you feel within your heart and your soul that you can do this. And so we're going to talk about some of the books I've read, the books that I am reading, the books that I will continue to read for as long as we have this technology, this space, and for as long as I want to teach Forex and do trading, which in my estimation we're probably going to be here until I'm 200 plus years old. if I'm so grateful to ever live that long, because there's always something to learn. I go back to what I had said before. Yes, I consider myself a master, a subject matter expert on Forex trading, but I also have to consider the fact that even though I have this energy inside me, I have to understand that the energy of being a student and explorer must be there as well. I must have those energies in balance. Otherwise, I won't be able to teach you. I get to a point where I become stale, old, outdated, and it doesn't work anymore. And that's something I hope that you can take within your hearts as well, to always be a student and always be a master. Do not go to one or the other. Just doesn't make sense. So I'm going to go ahead and talk about one of the first books I've read. And I recommend that you pick up a copy. And this particular book, for the amount of time that we have, which is about 10 minutes, most likely, this particular book, one of my great mentors, actually one of the first mentors that taught me how to trade, who is a fantastic trader of his own, Joe Threats, or who I affectionately call Joe Threats. He told me to pick up this book while I was still very new to trading, still very green to self-development, personal development, and all that. And it changed my life in terms of how I thought of books. It's like I dabbled in books here and there. I was never a reader back in elementary, middle school, and high school. What I used to do is I used to pick up the cliff notes in each of these books, or find like what do you call it? The Cliff Notes edition, Spark Notes, whatever you want to call it now. And I decided to just do that, read that, and whatever. And then I realized, and then I had a mindset of, oh, I don't need to read this. I don't need to read that, blah, 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 blah. But then when I picked up that first book, I realized something very important. Success leaves clues. I'm probably not the first one to tell you this. You probably heard this a lot in your life so far. However, that power is so true, because there's a lot of knowledge that's out there. There's a lot of knowledge from people who are more experienced in life than I am, for lack of a better word. There are people that are at my experience level in terms of age, and there are people that are younger than me that have their own wisdom that I can take into in my life and make myself become a better person. And then there was a quote specifically from Tony Robbins, who we'll talk about his book in just a moment, that really stuck out with me. If you are not growing, you are dying. I'm going to go ahead and repeat that one more time for everybody. If you are not growing, you are dying. And that stuck out with me, so it resonated with me, because I realized, whoa, if I know that there is more to life than there is presently, if I want to expand my mind, open myself up to all these opportunities, then I need to know how to grow. And for the longest time, I was just living. I wasn't growing. Now, granted, there are always things I need to learn and grow. So I'm not saying that I've got everything done or completed, but I'm heading in the right direction. And we can all head in the right direction, not just myself. And so, coming back to ourselves, pulling ourselves out of that tangent, Unshakable was really the first book that changed my perspective on reading and learning. And so Unshakable to me was really the catalyst for my knowledge and how I wanted to go ahead and move as not just a educator, but also a student as well. So let's talk about it a little bit. And again, if you have not gotten the book, that's going to pop quick of spoiler alert, the homework part of this journey, right? I recommend that you pick up a copy of Tony Robbins' Unshakable. Now I'm going to go into some notes that I've taken. We're not going to get into the full book because A, that's not my place. And B, I want to appreciate the important points of these books so that you understand where I'm coming from and how come these books are so important to me. So really, we have to talk about the word unshakable and where that comes into on our trading journey. So I'm going to read the definition of unshakable as given by Tony Robbins. It is an unwavering and undisputed confidence, a steadfast commitment to the truth, presence, peace of mind, and a calm amidst the storm. Now, what does that mean? If we all think about it, Forex market, when you first start trading, is a freaking storm. It really is. You've got all these numbers going up and down. Money is moving. You don't know what you're doing, and you're sitting in a place where it's like, whoa, what the heck is going on? I feel great. I feel angry. I feel confused. I feel frustrated. I feel all these emotions. That's a storm. That is a storm right there. And so we need to train ourselves to be a calm presence among that, to have a peace of mind, to know that everything works out the way it needs to work out, that we need to understand that we have a confidence in the trades that we're doing, in the strategy that we're working on, that it's not going to change, it's not going to waver. And that doesn't mean that we're going to be stubborn about it. We're going to always be open-minded to things that we can tweak, things that we can enhance to improve what we're doing. We're not stationary. That's not what that's about. But it's not being at a point where you just throw everything out the window. There's no need to do that. And so that's the definition of unshakable. It's just to have this confidence to know as we go about this long term, we are going to be successful at it. And not a thing, not a thought, not a soul is going to tell us any differently. That's unshakable in a nutshell. Now, as far as that inner peace of mind, right? We all dream of achieving that tremendous inner peace, that comfort, that independence, that freedom, to know that we can think for ourselves, that we can commit to a strategy that we full-heartedly know in our hearts is going to work, and that we can be free of anything that could impede our growth, that can impede the way that we want to trade. And again, in short, we all dream of that moment. We all dreamed about, especially when we were kids. I remember when I dreamed, I was like, it's funny. I had this vision of, and I didn't know how it was going to take place, but I had a what and a why. And it was for me to generate unlimited wealth, just money coming to me bit by bit, piece by piece, percentage by percentage, and use that money for, well, shoot, anything. Really didn't. It's like, for me, it was like in those dreams and those visions, it was like money was no object. Here's all this money that I have, and how can I benefit family, friends, and now, frankly, anyone who I now want to consider, a really great friend of mine, I consider them family. And I think that, there's a distinction between, in my opinion, family and friends. Family, which includes your friends, because not all family is blood. Not all family is blood, if you ever want to write that down. But for me, it was like, wow, if I had the ability to generate all this money and give it to the people that need it the most so that they can follow their dreams, be comfortable, not worried about money and all that, then that's what I want to do. Now, it was a vision, and I had this vision for a long time, and that was the unshakable dream that always stuck with me, and I didn't know how it was all going to take place. And then come November of 2020, I come to a point now where I know that particular dream can have a foundation or take root in a market that's about $6.6 trillion a day in volume. And I'm sure that number is just going to increase as this guy moves forward. But it is incredible that there is that potential to have that vision, and this can be the vehicle. Now, again, we are gaining incremental percentages as we're going to move forward. We're not getting 100%, 1,000%, 10,000%. That's not realistic. That's not realistic. If you can do that, if you have that strategy and you want to teach me, absolutely. I'll be the student to that when that is a concrete thing, right? Because again, I want to be a student. But I know for right now that is not a thing. And we just got to do this bit by bit, piece by piece. That's what these days are for. It's laying the foundation of our dreams in a brick by brick, piece by piece. We're building the foundation bit by bit. And that's all comes down to the root of that is an unshakable dream. Now, being unshakable is a state of mind. And when you're truly unshakable, you have unwavering confidence, even amidst this storm. Nothing riles you for any length of time. There can be stuff. There's always stuff, right? I'm not saying that you're going to be invulnerable, immutable to stuff that goes on, but if you have that mindset, you're going to, in your head, in your soul, think that everything works out. Now, you can call that internal optimism, and that's fine. But I have to have that in me because there were points in time where I was not unshakable, and it was very detrimental to my confidence, very detrimental to my psyche, and I went through depression because of that. And I don't want anyone to have to go through that depression ever, 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 ever. I don't want anyone to allow fear to take over. That's something I don't want anyone to do. So here's what we're going to do quickly. So I'm going to show everybody what I'm doing with these trades right here, because we're getting to the close of the market time. So because we have two trades right here that are technically causing my margin to go up or down, we're going to go ahead and make sure that these trades are closed so that I have zero margin remaining. Now, to do that, I'm going to close first this trade right here. So my objective now is to close two sell trades or open up a trade so that the margin level goes down. Now, to do that, I could pull up my profit by left-clicking on profit, left-clicking again to make sure the arrow is going up, just like that. Very similar to what we were doing with the time. But we want to make sure now that our highest amount of profit trades show up right there so that it's easy for us to close the higher profited trades. So what we'll do is we'll close this trade out. Now our margin has gotten to 3.43, which means one sell trade is still technically needs to be closed. And we'll close that trade too. And that is it. That is it. No more trading needs to be done. You don't have to do anything else. That's it. Because the margin has gone away, I can step away from this computer and I can proceed with the rest of the day. Now, as you can see, because we had closed those trades in profit and we need to go back and resolve this buy trade right here, we are going to notice that we have a little bit of a drawdown, a little bit of a percentage. And while to the eye, that's definitely concerning. I know I would have a heart attack if I, knowing if it said to me, oh, you're about $16 down, you're about 13% down. But now I know, again, we come back to this number right here. Yes, the balance is there, and that's important for measuring where we are in terms of success, but the real number is right here. Now let's take a look at what we're started at, because we did write down that number on the beginning of this call, $111.56. Our equity is $112.65. What does that mean for us? We did $1 better today than we did yesterday. So we have won the day. We've won the day because we have $1 extra in our equity. And so now that allows us to move forward and realize, hey, yes, our balance is up a bit. Yes, we have a little bit of drawdown, but we have our capital up at, or our working capital now up at $1. So we have done the objective. What's the main objective of trading? What do we talk about? We need to preserve our working capital no matter what's won or no matter what's lost. So because that's there, we did it. We did it for the day. We can take this day and be proud of ourselves. Now, as we move forward to tomorrow, the next trading day, if you will, on the journey, there are going to be a few things that we'll talk about that are going to show up on our account, which is beautiful. I've anticipated that. But we don't want to overwhelm ourselves with that right now. Just know that today we have won and that we can move forward in the right direction. And again, for homework for everybody, I need you to pick up a copy of Unshakable by Tony Robbins and give that a read. I guarantee you'll enjoy that. So with that being said, this has been Jordan Rosario. Day 3 of our Forex trading journey is in the books. And I hope that each and every one of you has an amazing, beautiful rest of your day today. Happy trading, everybody.